Okay, so let's continue. Let's continue our discussion on chapter number 13, accounting for amalgamation or amalgamation of companies. Happy morning. Come on, guys. It's rainy morning. So, everyone, once again, happy morning. Okay, so close your notebooks, close your textbooks for 5 minutes. We'll quickly run through whatever we have done in the previous class and then we'll continue. So first we started with the basics amalgamation. I explained you different types of amalgamation. Then we saw there are two companies involved. One is purchasing company, other is selling company. Purchasing company is also called as transferee company and selling company is transfer Raj. Then we saw no one will buy company for free or no one will sell the company for free. So definitely you have to pay some amount. That amount is called purchase consideration. Yesterday's class, how many methods did we see? Four methods to compute purchase consideration. First one, lump sum. Never it will come in the exam because that the amount will be given. There is no logic for the amount. They just give some random amount. Then next, net payment method where individually the people are settled. Equity shareholder separately, preference shareholder separately, and debenture holder separately. Third one is net assets method. Total asset minus outside liability is net assets. Then last is intrinsic value method. Intrinsic value method. So in these four methods, we compute purchase consideration. There we saw four illustrations in last class. Then we moved on to the next very important concept of this chapter, journal entry in the books of selling company. So around 10 or 11 entries we have written. Let's revise those entries quickly and then we'll start the problem. So what is step number one? Transfer all the assets. Transfer all the assets. Journal entry. Realization to asset. RP books close. Realization to asset. Realization to asset. Next is second entry. Not all the liabilities. Liabilities which are taken over. Journal entry. Liabilities to realization. Third entry. Purchase consideration due. Purchase consideration due. Journal entry. Purchasing company account debit to realization. Fourth step. Purchase consideration received. Journal entry. Equity shares of purchasing company. Different shares of purchasing company. Cash to purchasing company. To purchasing company. This are the journal entries for the sorry, purchase consideration received. Then next, expenses. That I showed you three scenarios. Expense paid and borne by selling company, journal. Realization to cash. Paid and borne by purchasing company. No entry. And third, paid by selling, borne by purchasing. Purchasing company to cash, cash to purchasing company. Sixth, ah, liabilities not taken over. Liabilities not taken over. Journal entry. Liabilities to cash. Liabilities to cash. Next entry. Realization will come later due to preference shareholders. Yeah, par and premium. If it is par, preference share capital. Preference share capital to preference shareholder. If it is premium, add realization. Debit, extra debit realization. Then payment to preference shareholder. Journal. Preference shareholder to preference share capital of purchasing company to cash. Then realization profit journal. Realization to equity shareholder. Realization to equity shareholder. And then last two entries due to equity shareholder. Equity share capital. Reserves and surplus to equity shareholder and final entry. Equity shareholder to equity shares of purchasing company cash. All these entries we saw in the previous class. So now today we will start full-fledged problems. Illustration 5. So Y Limited acquires the business of Z Limited. Who is the purchasing company? Who is the selling company? Z Limited. Whose balance sheet as at 31st March is as under. I would strongly suggest amalgamation, internal reconstruction, no point reading the balance sheet. First read the adjustment requirement and then you can read the balance sheet. However, first problem, so I'll take you through the entire problem quickly. Share capital 12 lakhs, reserves and surplus 1 lakh 58, long-term borrowing 2 lakhs, and they have given individual notes, trade payable and other current liabilities, non-current assets, few current assets, and notes. Yeah, notes. This part is important. Workman compensation reserve, it is 8,000, but liability is only 5,000. So, bhaiya, 3,000 is extra reserve we have. 3,000 is the extra reserve we have. Long-term borrowing, PP, intangible asset. Y Limited was to take over all assets except cash. All the assets will be taken over by Y Limited. And liabilities except interest on debenture and to pay the following amount. Rupees 2 lakh 7% debenture in Y Limited for the existing debenture in Z Limited. Existing, they have 2 lakh debenture. For this 2 lakh debenture, they will give debenture of purchasing company. Each debenture of Y Limited is to be treated worth 105. We will do this in the problem. For each, but tell me, will this form part of purchase consideration? No, payment to debenture holder will never form part of purchase consideration. Then, for each preference share in Z Limited, rupees 10 in cash and 9% preference share of 100 each. Everyone? So every preference shareholder, they will give cash, they will give preference shares. For each equity share in Z Limited, 20 in cash and 1 equity share in Y Limited having a market value of 140. Expenses of liquidation of Z Limited are to be reimbursed by Y Limited. Who is Y Limited? So selling company is paying and later it is reimbursed by purchasing company to the extent of 10,000. Actual expenses 12,500. Y Limited valued land and building at 5,50,000, plant and machinery 6.5, and patent 20,000 for the purpose of amalgamation. I have not given what to be done, no? Acquired business, balance sheet, something is to take. Okay, nothing given. We will, because I have thought that, let's assume they are asking us journal entry in the books of selling company, journal entry in the books of selling company. Now, I'll give you 1.5 minute time. I want you guys to calculate purchase consideration. But before you calculate purchase consideration, tell me what method. Come on, everyone. Net. Nahi. So it is net assets and net payments. We discussed similar problem in the previous class. With the help of net assets method, you will calculate the purchase consideration. With the help of net payment method, you will discharge the purchase consideration. Everyone? Yes. So, yes, your 1.5 minutes starts now. I don't need any answer. Once you complete, wait for me. Once you complete, wait for me. Let's see who can get the right answer. Maximum 1.5 minute. Try on your own. It will give you good confidence. Thirty seconds more. You have to just roughly calculate. Don't write in fair. Anyone with the numbers ready? No, raise your hand. कोरस में इतने आंसर आ रहे थे इंडिविजुअली. Okay. Okay. So at present, company has 8,000 equity shares and 4,000 preference shares. At present, 8,000 equity and 4,000 preference. However, perfect. Anyone else? 8,000 and 4,000. So for the rest, let's do the same way how we did yesterday. Calculation of purchase consideration. Calculation of purchase consideration, everyone. So particulars, amount and amount. What did we write first? For preference shareholders. For preference shareholder, under that 4,000 9% preference shares of face value 100. Now, everyone, here they said for each preference share in Z Limited, there were 4,000 preference shares. For each preference share, we will give 10 rupees in cash and we will give 9% preference share. Ratio is 1:1. 1:1. So, 4 lakh. And cash. 40,000. So, 4,000 shares into 10 rupees. 40,000. So total 4 lakh 40,000 everyone. Yes, and after preference shareholder. For equity shareholders. 8,000 equity. For each equity share 20 rupees in cash. So first cash. There were 8,000 equity shares into 20 rupees. 1,60,000. And one for every one equity share they will give one equity share. So again the ratio is 1:1. So 8,000 equity shares of face value 100, but there is a twist. The market value is 140. How much? 11,20,000. So add both. 12,80,000. So total purchase consideration. 17,20,000. Bhaiya, you said net assets and net payments. This is only net payment. Huh? Huh? Agreed. Yeah, they have given a Y limited valued. So these are the agreed values. Huh? Mhm. For purchase consideration, in the previous problem, we calculated net assets and then we calculated equity and preference. So, here you have to read the question very, very carefully. Let me take you through that problem again. Not this. Yeah. Now, see here, see the wordings, everyone see the wordings. They have used preference shareholder are discharged at a premium by issue of preference share. This was very simple. For equity shares, they will give for every they will give 3 equity share for every 2 and pay the balance in cash. For this balance, we calculated net assets. But in this problem, we don't have this challenge at all. In this problem, we don't have that challenge at all. Directly, the net payment method is very clear. So which method are we following in this? Only net payment method. Only net payment method. Now, tell me what is the method of amalgamation? Purchase, right? Very good, very good. We read 5 points yesterday. For amalgamation to be nature of merger, 5 points everyone. All assets and liabilities should be transferred. Here, there itself, first point not satisfying. They are not taking cash. They are not taking one liability. So this is method of purchase. Second, all assets and liabilities should be transferred at. Third, same business to be continued. Fourth, 90% shareholder should be same. Last, purchase consideration should be in the form of equity except fractional shares. Except fractional shares. So where this is method of purchase. But the beauty again is the method of merger or purchase. The difference come only in the books of purchasing company. In the books of selling company, whatever method you follow, it is same. Last class, I directly gave you the journal entry. You did not ask me which method. Why? Because both the methods, the entries are same. So selling company, there is one standard method because we are going to close the balance sheet. But purchasing company, we have two alternatives. Amalgamation in nature of merger, amalgamation in nature of purchase. Can I continue?
Yes.
So yeah, purchase consideration is done 17 lakh 20,000. Now let's start passing the journal entry. Let's start passing the journal entry. Chaitanya, what is the first journal? Realization account debit. Now two assets. So if I go assets, PPE and intangible asset that I have to take from here, land and building, plant and machinery. Land and building, plant and machinery. Then intangible asset, we have two, goodwill and patent. To goodwill, to patent. Then we have few current asset, inventory, trade receivable. Should I take cash?
Yes.
Except cash.
Inventory, trade receivable. They made very clear that cash is not taken over. So cash will remain in the books of selling company. Cash will remain in the books of selling company. Now, a realization figure we can post only towards the end after we calculate all the credits. Now, land and building, should I take 4 lakh, 6 lakh, or should I take 550 and 650? I should take everyone 4 lakh, 6 lakh, or 550, 650. All these doubts will come in exam. So go to your summary notes. Go to your summary notes. Point number 6. All the assets and liabilities. All the assets and liabilities should be transferred to realization account. All the assets and liabilities should be transferred to realization account at book values. All the assets and liabilities should be transferred to realization at book value. Why bhaiya book value? Because basically we are trying to reverse the balance sheet. We are trying to reverse the balance sheet. Now, if you record at book value, then you have to pass one more entry for revaluation. And read the sentence carefully. Y Limited has revalued. Purchasing company has revalued, not the selling company. Everyone who has revalued, purchasing company, selling company did not do. So you cannot pass any entry in selling company books. So I will record 4 lakh and 6 lakh. Goodwill 240 and patent 50,000 you cannot. Patent is recorded at 20,000. 20,000. Sorry, you are all are alert. So patent done. Then next inventory 1.5 lakh and trade receivable 180. Total all the credits 16 lakh 20,000. 16 lakh 20,000. First entry over. First entry over. Now, Bhaiya, can we pass individual entry? First, waste of time. Second, we will not give you marks. All the assets should be transferred together. Bhaiya, I'll pass separate entry. Realization to land and building, realization to plant and machinery. Not allowed. Not allowed. All the assets have been transferred except cash. Then, transfer of liabilities. Should I transfer all the liabilities? No. No. So, shareholders fund, you leave long-term borrowing. Note number 3. 6% debentures. Any other liability? Trade payables 120. So then WCRY. Huh? But this is a reserve. We transfer only liabilities. Expected liability is contingent liability. But then expected liability is 5,000. So you want me to recognize 5,000? Ishma, 5,000 should I record? Which sum we are? Which subject? Ah, yes. Should I recognize the liability of 5,000? The answer is yes. So workman compensation. 5,000 year, then 6% debenture 2 lakhs and trade payables 120. Add all the three. 3 lakh 25,000. 3 lakh 25,000. Everyone, can I continue? Then next entry is purchase consideration due. Purchase consideration due. Suvidhi, journal entry. Now it's okay, but from next time onwards, if you tell purchasing company, will strike out the journal. Name of the parties are clearly mentioned. Use those. Y Limited is the purchasing company. Z Limited is selling company. So ideally, भैया heading ही नहीं लिखा आपने. Journal entries in the books of Z Limited. Journal entry in the books of Z Limited. So here the entry will be Y Limited account debit to realization. Y Limited to realization. And amount is 17 lakh 20,000. Everyone, is it clear? Just give me 1 minute. Because a lot of space constraint. Now, so we have passed 3 entries. First, assets transferred, liabilities transferred, purchase consideration due. Next entry. Very good. So we are receiving equity shares of Y Limited, preference shares of Y Limited. We are receiving cash from them to Y Limited. So equity shares, how much? 11,20,000. Preference shares, 4 lakhs. Cash, 2 lakhs. And 17 lakh, 17 lakh 20,000. So this is purchase consideration received, purchase consideration received. And now while we are discussing, if you are referring the books, you will never learn amalgamation. While we are discussing, wrong answers are okay, but then you will start thinking. But if you are immediately referring your books, immediately if you are referring the books, 100% take it from me in writing, you will give wrong answers. Yes, Navya. Next transaction.
Expenses.
Expenses. Ah, so yes, what expenses is given? Yes. Point number 4. Think and tell. Think and tell. What will be the journal entry?
Y Limited to cash 10,000.
Hmm.
Then cash to Y Limited 10,000.
Hmm.
Realization to cash 2,500.
Very good. So to the extent of 10,000, we have paid and they are reimbursing. Yes. So journal entry Y Limited to cash and cash to Y Limited. So and next for 2,500 we are bearing. Can I combine these two entries? Can I combine these two entries? Y Limited realization so 10,000. Now, here, should we record this 10,000 entry separately? 10,000 what they are giving us? Definitely yes. So cash to Y Limited, 10,000. They are reimbursing us the amount. They are reimbursing us the amount. So this completes 5 transaction. 5 transaction: asset, liability, purchase consideration due, and realization expenses. Rakshita, next entry. No, Anand. नहीं, रेशमा. नहीं, Krish. Very good. There was one liability which they did not take. Liabilities not taken over. Liabilities not taken over. Those who have answered it wrong, absolutely okay. We are in the learning stage. So next time you will not forget, but don't refer your book no matter what. Basic 10, 11 entries, guys. So liabilities not taken over. What liabilities they did not take? Interest due on debenture. No, they have given here. Interest on debenture, 12,000. Interest on debenture, 12,000, everyone. So, interest outstanding, yeah, outstanding interest to cash, 12,000. Now, here there is small difference between multiple suggested answers. Few suggested answers they pass liability to bank. Few suggested answers they pass on due entry and then payment entry. In this case, outstanding interest to debenture holder to bank. Outstanding interest to debenture holder to bank. Bhaiya, what we are going to do, we are not going to pass any due entry. Because if it is there in the balance sheet, due entry is already passed. So liabilities, we will directly settle. We will directly settle. Everyone. So this is also over. Next, Dave. Very good. Preference share capital to preference share holder. But answer is wrong. Naman. नहीं. Naman. नहीं, I will not show question. Because, bhaiya, 1:1 ratio was here itself. We are giving 40,000 extra cash. We are giving 40,000 extra, yes or no? Yes. So for this 40,000, compulsory you have to transfer this to realization. So preference share capital, realization account to preference shareholder. Preference share capital, realization to preference shareholder. Amounts 4 lakhs, 40,000, 4 lakh 40,000, 4 lakh 40,000. You लास्ट में बैठेंगे आज और बैठो लास्ट में. हाँ. So preference shareholder over, preference shareholder over. Now realization profit, realization profit. So there are two options, guys. Now realization, have they asked in the question? Realization, have they asked in the question? Bhaiya, question they did not ask anything, bhaiya. So what we will do, we will prepare realization account. Realization account. We will assume this is also asked in the question. So in realization account, first I'll write all these assets. Sundry assets, last class I said you should not write. In all these amounts. Now next, liabilities. So by 6% debenture, trade payable and workmen compensation. Amounts 2 lakh, 120 and 5,000. Then purchase consideration due. Y Limited 17 lakh 20,000 by Y Limited. Then next is just, oh, I did not write this. Yeah.
Cash to Y Limited, ये 10,000 वाला.
ये क्या? Okay, so Y Limited we have posted. Then realization, preference shareholder. Sorry. Realization expenses to cash 2,500 and to preference shareholder 40. Yes, calculate to profit or loss. 382 500 is profit. Happens only in problems. Real life always loss only. So realization profit 382 500. Now I leave it to you, Bhaiya. How do we pass the entry? Profit and the due entry shall we combine or we shall write separately? We'll write separately so that even if realization is wrong, for that due entry you will get marks. Vashita, journal entry. So realization to equity shareholder, realization to equity shareholder. How much? 382 500. 382 500. Next, Kushali. Very good. Equity share capital. Now check reserves and surplus. Note number 2. Capital reserve 1 lakh. PNL 50,000. Workmen compensation reserve 3,000. Because out of 8,000, 5,000 is our liability, everyone. Yes. Then Equity share capital amount was 8 lakhs. 2 equity shareholder, 9 lakh 53,000. 9 lakh 53,000. Everyone, can I continue? Did we miss out anything? Equity 8 lakhs. 9 lakh 53. Everyone. Now, if you add both profit and this, the total amount comes to 13 lakh 35,500. So, final entry, equity shareholder 2. One second, I'll write this on here. Equity shareholder 2. Come on. Equity shares of Y Limited 2 cash. So the total amount is 382,500 plus 953, 1335,500. 1335,500. In that shares, 11 lakh 20,000 and 2 lakh 15,500. Now, problem over. But what and all will come in the exam, I'll tell you. Immediately, student will get a doubt. Bhaiya, equity cash was 160. How did we get 2 lakh 15,500? Realization profit 3 lakhs. Something close to 3 lakhs. How? So very simple. You should not reconcile these two numbers. This 160 is the cash which is given by purchasing company, story over. And this is the cash which we are giving to our shareholder. Everyone. Yes. So now we have computed purchase consideration, all the journal entries. Now what and all can we ask? Oh my God. Why? So we missed one entry. We'll pass it now. For preference shareholder payment entry, preference shareholder to cash to preference shares of Y Limited to cash. 440, 4 lakhs 40,000. Everyone. So now, this is okay. Now, what else can be asked? They can ask you to prepare relevant accounts. Now, what are the relevant accounts? What are the relevant account? Realization account I have already done. Then, apart from that, they might ask you cash account. Cash account. So, two balance brought down. Opening balance of cash 70,000. Then we are getting from Y Limited how much? 2 lakhs. Then we are giving to preference shareholders 40,000. And how much to equity shareholders? 215,500. Very good. Realization expense 2,500. 10,000 we paid, but we got it. We paid, but we got. And now you say, check if 12,000 difference. Where how? Outstanding interest we have paid. Check here, everyone. This entry. I have paid. We have paid. Purchasing company have paid. So by outstanding interest, 12,000. It is 270. Everyone, cash account tallied. Yeah. Now, all this asset account also tallied. Whatever was there in the balance sheet, we have reversed. Everyone, whatever was there in the balance sheet, we have reversed. This have also tallied. So, apart from this, what else they might ask us to prepare? Equity shareholder preference shareholder, equity shareholder, and Y limited. Yeah, when we will complete this problem in exam? That doubt I also have. So, preference shareholder, yes, tell me when it will come. UNT, come on, UNT. What is the UNT? By preference share capital. By preference share capital, 4 lakhs. By realization, 40,000. Two, preference shares of Y Limited. Preference shares of Y Limited, 4 lakhs. To cash. Now, equity shares. Come on everyone, equity shares. So, by equity share capital, 8 lakhs. By reserves and surplus, you cannot write. You have to write by capital reserve 1 lakh. By PNL 50,000. By current compensation reserve 3,000. No. By realization profit 382 500. And 2, equity share of Y Limited 11 lakh 20. Cash 215 500. Match bhaiya, done. Next, Y Limited. First 2 entries we don't have, third entry. 2. Realization 17 lakh 20,000. Then discharge by equity share of Y Limited 11 lakh 20,000. By different shares of Y 4 lakh. By cash 2 lakhs. So now if I total, is it matching?
Yes.
Everyone. So now, Bhaiya, what else can they ask Bhaiya? So this is just the journal entry in the books of selling. For 14 marks, they ask journal entry in the books of selling, journal in the books of purchasing, then balance sheet in the books of purchasing. And mock paper, what I did, I gave internal reconstruction with amalgamation. So these problems are really time consuming, but examination they play so well, and student they get in the trap. What examiners they do, generally you can divide the syllabus into accounting standards other than accounting standards. So student they skip this chapter, and this chapter they ask easy question which they have not prepared, and they ask tougher question from accounting standards which they are prepared well. So both the places marks are gone. You take examination amalgamation problem and see mock problems. This problem they have asked for 10 marks. Same problem for 10 marks. But the point is, student as soon as they see amalgamation, they don't attend. Now, was purchase consideration tough?
No.
Definitely not. Now, journal entries, was anything tricky?
No.
Workman compensation reserve only was the only adjustment where you had to think. Apart from that, mechanically, whatever journal entries I gave, cut, copy, paste. Yes. Then this I did extra. They might ask you this also. And not only this examination, they have asked relevant ledger. So I have not prepared few relevant ledgers. What other ledger you will prepare via equity share capital, preference share capital? I have prepared equity shareholder, preference shareholder. I did not prepare capital accounts. So they might ask you capital accounts. Then what are the other ledgers involved? That's all. That's okay. Only one reversal. I think, yeah, those two extra ledgers they might ask. So this problem it's lengthy. This problem is lengthy, but trust me, it's not tough. It's not tough. Examination you can manage. Now we will have one very, very simple and easy dealings because once I send this problem, it will take minimum 10 to 12 minutes to copy. If I see anyone opening their mouth for any reason, I'll tell you smoothly and you'll go out of the class. Done? Everyone? फॉर वॉट एवर रीजन, भैया पानी मांग रहा था, पेंसिल मांग रहा था, पेन खत्म हो गया, पैर के ऊपर चेहरा आ गया, बेंच टूट गया, ये बाहर ये बुलाया, एसी की हवा आ रही थी, नो रीजंस, नो मैटर व्हाट. Because if I'm here for 10 12 minutes, I'll sit on your head and I'll ensure you write. So first one or two problem, I'll ensure that you write smoothly because you have to understand this is the first problem in selling companies books. So you write, you take your 10 12 minutes time easily and you write all the journals, purchase consideration and the ledgers. I want you to write. I'll send this in WhatsApp. No way I can project this here. But if I see anyone open their mouth for whatever reason, next second you'll be out of the class. Yes, I've sent everyone. You can start copying. Understand and write, don't blindly copy. Compulsory. Few of them still writing. It's been 20 minutes approx. If we go at this pace, one class will do maximum 2 problems. Huh. 10,000 will come on both the sides. Now, let's move forward. Journal entry in the books of purchasing company, everyone. Open your summary notes. Point number 7. Journal entry in the books of purchasing company. So concept wise, we'll be completing on the concepts today. Tomorrow, just revision. Journal entry in the books of purchasing company. There we are going to have few points. Point number 1. Point number 1. Business purchase. Point number 1. Business purchase. Whenever you purchase account is debited. Same way, here you will debit business purchase account. Business purchase account. And whatever money purchase consideration you will give to selling company. So ideally, the journal entry should be business purchase to selling company, but never you will do so. You will not give to selling company, you will give to liquidator of selling company. So business purchase account debit to liquidator of selling company. Business purchase account debit to liquidator of selling company. And business purchase to liquidator of selling company. Point number 2. Now, all the assets and liabilities selling company, they have removed from their books. Now, purchasing companies, they should record their books. So, point number 2, incorporating assets and liabilities. Incorporating assets and liabilities. Very, very simple. Assets account debit to liabilities account. Come on, write everyone. Assets account debit to liability account debit. To business purchase. Very good. Asset account debit to liability account debit to business purchase. So first entry, due and purchase. We have purchased business for that. Second, incorporation of assets and liabilities. Third entry, discharge of purchase consideration. Discharge of purchase consideration. Discharge of purchase consideration. Liquidator of selling company account debit. Liquidator of selling company account debit. To preference share capital to equity share capital to cash. Liquidator of selling company account debit to preference share capital to equity share capital to cash. Then point number 4. See now, everyone please listen to me. There are two possibilities. Debenture holders are there for selling company. Those debenture holders we are telling, we will give you my company debenture. I am acquiring a company. The company in which I am acquiring, I am telling that debenture holder, don't worry, I'll give you debentures of my company. So in that, what we'll do, in second entry, we'll take that liability. We'll take that liability. And now we are giving them our debentures. So point number 4. Point number 4. Settlement of liabilities. Settlement of liabilities. Settlement of liabilities. You will tell me the journal. So if it is debenture, we can write debenture of selling company to debenture. Because I have to credit my debenture. So debenture of selling company to debenture. Debenture of selling company to debenture. Yeah, this journal entry is in purchasing company books. Debenture in selling company books. Second entry, you have taken the liability. Now you are settling those liability. Now there are a lot of other entries which will come in this, but before we start that, let's do it in the same problem. You will get a complete, but here they have not given holding company's balance sheet. No problem. We'll pass the journal entry. We'll pass the journal entries in the books of purchasing company. In the books of purchasing company. Y Limited. In the books of Y Limited. In the books of Y Limited. What is the first entry? Business purchase to liquidator of Z Limited. 17,20,000. Then next entry, all the assets and liabilities they have to record. One second. Now, think and tell, all the assets and liabilities will be recorded at book value or market value. Market value. They said, we are least bothered whatever figure was there in your books. We will take at the agreed values. We will take at the agreed values. So land and building. 550 and 650. And we already know this is which method? Purchase method. Purchase method. Then goodwill. Agreed value not given, so we will take book value. We will take book value. How much? 240. Patent. We have given the agreed value. Then inventory, trade receivable. 150 and 180. Now where this cash will come? Sure. Because where they did not take cash, bhaiya. Cash will not come. Cash will not come. Then all the assets we have recorded, but we'll leave a line. We will leave a line. Why? I'll tell you in 1 minute time. 6% debenture of Y Limited, no? Or Z Limited. 6% debenture of Z Limited. I am showing this debenture separately. These are not my debentures. These are the debenture which I have taken from selling company amount. 2 lakhs. Trade payables is 120. And workman compensation, it is not reserve liability.
5,000.
Then. Two, business purchase. To business purchase, what's the amount?
17 lakhs, 20,000.
17 lakh, 20,000 everyone. 17 lakh 20,000. Now, a very simple max. Very simple max. Amount paid. Amount paid to acquire the company.
17 lakhs.
17 lakh 20,000. Net assets which we got. Net assets which we got. Total all the asset minus the liability. Total all the asset minus the liabilities.
17 lakhs.
17 lakh.
I said so liabilities.
Total all the asset minus outside liability. How much?
14 lakhs 65.
Four. Total all this asset it is 17 lakh 90,000 minus 3 lakh 25,000.
14 lakhs.
14 lakh 65,000. 14 lakh 65,000 everyone.
Yes.
Now have you paid extra or have you paid less? If you are paying extra, why you are paying? Goodwill. CA Foundation. See, now, 100 rupees thing, you are ready to pay 120. 20 rupees extra you are paying, either two reason, because it is emergency. Hospitals, we don't have a choice. Whatever they ask, we pay. Or second, because it is a branded product. It has its goodwill. Now, that's the reason. iWatch, how much does it cost? iWatch,
लेटेस्ट वाली पे ज्यादा है
35, 40,
60 आसपास है लेटेस्ट वाली
60, 80.
8 सीरीज
ऐसा क्या होता है उसमें?
एप्पल में एप्पल
So, how much extra we are paying? 2 lakh 55,000 we are paying extra. Second. So how much extra we are paying? 2 lakh 55,000. 2 lakh 55,000. Now, goodwill will be 2 lakh 55,000. Basically, goodwill or capital reserve. If you are paying less, then it will be capital reserve. Then it will be capital reserve. But yeah, goodwill is already there. This is existing goodwill. This is purchase goodwill. Like that, you should not think. Like that, you should not think. Now, when you acquire a business, after acquisition, their goodwill plus our goodwill will get merged. So, goodwill, there should be only one line item. Yes, tell me.
195
Everyone, you see how we are developing our answer. 4 lakh 95,000. So, the earlier company goodwill, will it come or not? Yes or no? It will be included. Everyone, are you able to follow? Now, we have 4 lakh 95,000. 4 lakh 95,000. Go back to your summary note, point number. We are writing the journals. Okay, then we'll wait. Remember, I have to give you 1 point here. So, bhaiya, first entry, we have purchased business. Second entry, we have incorporated assets and liabilities. Everyone, can I continue? Next entry was discharge. Liquidator of Z Limited to equity share capital to preference share capital
to cash
to cash. So 17 lakh 20,000. How we on break up 1120. 4 lakhs and
2 lakhs
this entry is wrong. And I am not showing the question also. By now you should have been alert. Same problem we are doing from 1 hour 30 minutes. If now also you don't have grip on the numbers, no, something is wrong. Think. Why?
Because we're paying an excess for
No. Think. Huh? Equity share capital. So, bhaiya, the face value of share is 100. Market value is 140. So, along with equity share capital, there'll be security premium. Security premium. So, equity share capital is not 1120. 8,000 shares I've given into 100. 8 lakhs. And 8,000 shares into 40. Everyone. So, bhaiya, 3 entries, very clear. Now, bhaiya, realization expense 10,000. Tell me the journal. I will tell the credit cash. Kush? Z Limited to cash. So, debtor Z Limited. He will give you the 10,000 back. Liquidator to Z. Look, okay, 10,000 you will give to liquidator. PNL. It's a good option. So for this entry, you have to check your second entry. In second entry, goodwill or capital reserve. So goodwill to cash. Now, bhaiya, everyone pay attention. I have paid 17 lakh, 20,000, but I have incurred 10,000 expense also to acquire the same company. And the net assets which I am getting, again I have to calculate 15 lakh 50 minus 325. 1550 minus 325. 1225. So bhaiya, my actual goodwill is 5 lakh 5,000 and not 495. But this 10,000 we will pass a separate entry. We'll pass a separate entry. For this 10,000, the journal entry will be goodwill to cash. Capital reserve to cash. So everyone in your journals, point number 5. Point number 5. Realization expenses. Realization expenses. Goodwill slash capital reserve. Goodwill slash capital reserve to cash. Goodwill slash capital reserve to cash. Everyone, can I continue?
Second case, जहाँ पे paid and borne by purchase.
Paid and borne, उसके लिए ये entry है. Selling company, no entry will come. And if they are reimbursing, same entry. So, bhaiya, almost done except one. First point. 2 lakh 7% debenture in Y Limited for the existing debenture in Z Limited. So they are telling existing it is 2 lakh. I'll give 2 lakh of my debenture. 2 lakh of my debenture. But it will be 7%. At present it is 6%. In Y Limited for the existing debenture. For the purpose, each debenture is to be treated as what? 105. So journal entry. 6% debenture of Z Limited to 7% debenture to securities premium, everyone. So 2 lakh was the debenture, but I am giving 5% extra, 10,000. 2 lakh, 10,000. But bhaiya, with this one problem. When we took the liability, we took at 2 lakh, but we are settling 2 lakh 10,000. Everyone? So no, here you have to change. It will be 2 lakh 10,000. Goodwill will change again. This is the actual goodwill. So that is that. That is that. That will not change. That is why I've given independent entry. Please, guys, please don't get confused. This 10,000 is for expense. Forget it. This 10,000 is for expense. That's all. And this 10,000, this goodwill is the balancing figure. This 10,000 is the balance. This goodwill is the balancing figure. Now the problem is, bhaiya, land and building, plant and machinery, patent, we took at agreed values. Debenture, we took at book value. Debenture, we took 2 lakh of the book value. We took at 2 lakh, but we know we are going to pay them 2 lakh 10,000. Then we should have taken at 2 lakh 10,000. So now journal entries, whatever you wrote, these 5 entries are there. 1, 2, 3, 4, 5. 5 entries are there. Right next to point number 6. Hey, not in journals. Point number 8. Point number 8. Notable points. Notable points. In the books of purchasing company. Notable points in the books of purchasing company. Under notable point, point number 8. Assets and liabilities will be recorded at agreed value. Assets and liabilities will be recorded at agreed value under purchase method. Under purchase method. Point number B. Assets and liabilities will be recorded at. Assets and liabilities will be recorded at book value. At book value. Under merger. Under merger. Bhaiya ullu bana rahe ho. Merger means assets and liabilities should be recorded at book value. But you will forget, I am sure. So I gave. Then this I gave. Next point number C. Point number C. Under purchase method. Under purchase method. Goodwill of selling company. Goodwill of selling company will get merged. Will get merged with goodwill of purchasing company. Goodwill of selling company will get merged with goodwill of purchasing company. Everyone, so we are not writing two separate goodwill. We are not writing two separate goodwill. Everyone. So what were the things we have modified? First we wrote all the assets, then we removed goodwill because only one goodwill will come. And then we recorded the liability at agreed value. Liability at agreed value. Everyone. Yes. Now you can write this and then go for break. So writing and break put together by 12 o'clock. 12 o'clock we will start the next session. Both the method it is same. That's why I did not give the method itself. Wherever there is a change, I will tell you. Purchase this and selling company this. First time 1.5 month ना आपने कुछ relevant doubt पूछा. So the entries it will remain common under both the methods. Only the amounts will change. How we have a problem. We have a problem for that.